Hi, welcome to this video day, which is on the 11th of September. It's Sunday. In today's video, we're going to be looking at a pair which is going to be GBP USD. Now, GBP has had a big rally in recent months, but it's kind of a strange rally because the rally is nothing to do with bullish fundamentals around sterling. It's due to two other factors. And I think those two other factors are about to exhaust, and the pound could have a big break to the downside. It's a low risk, high profit potential trade if our logic is correct. Now I'm going to go through our logic and the key levels of support and resistance when we get to the chart. But just before we do so, if you want to learn our trading strategy, learn all our trading techniques, and check out our daily technical sentiment analysis of 14 FX pairs, including GBP USD, all you need to do, click on the link beneath this video and you'll get live access to our member center. You can also follow us on our Facebook page if you wish, follow our free research blog, and finally join our Facebook group of traders. Right, what we're going to do now is go and take a look at the chart, the logic of the trade. Right, we're on a chart of GBP USD. Now, in terms of the rally in sterling, from the low down here after the mini budget sell-off, that's nothing really to do with bullish fundamentals about the UK. Now, in terms of, I've written up some notes here. This view here comes from, I think, yeah, it was Morgan Stanley, and I agree with it. It says if we break down the rally, about 50% was due to an improvement in the UK's fiscal credibility since the budget disaster back in September. The other 50% has come from a broad-based selling in the dollar, where the US currency makes up 20% of the BOE's sterling basket. If you're unfamiliar with what that is, just look it up on the Bank of England site, but it's to do with trade competitiveness, okay? So this is not to do with bullish sterling fundamentals. In fact, what you can see here, just go through it quickly, is you get the mini budget sell-off and follow on, then this rally here, big one, Bank of England intervention in the gilt market to stop pension funds from going bust, but the market took that as bullish. Then we eased back, then we come back up again as the mini budget is totally rolled back by Chancellor Hunt, sideways, then up again. Rishi Sunak becomes PM. The market was concerned that Boris Johnson might. So this rally back here up to 116 from below 108, just basically a relief rally, no change in the fundamentals. Then we dip back a bit, and then you get kind of the broad-based dollar sell-off, which powers sterling higher. Now, if we were to look, the UK economy is in worse shape than the US economy. It's debatable. The US economy might go into recession. I think the UK is already there. You've got the energy hit on all European currencies, which isn't as severe in the US, obviously. Interest rate differentials favour the USD now and going forward. Now, we do have the Fed and the Bank of England meeting this week, or in the coming week. Bank of England will be dovish in our view. There's no reason for them to be hawkish. I do not think the Fed can be as dovish as the market expects. I'll do a video on the USD generally in the week, okay? But sterling has just run too far to the upside. Now, in terms, I'm going to go through trading a break lower here. If we were to break higher, I'll cover that in a video I do in the week. But looking for a break lower, and I'm going to go from this high on the left of my chart and just draw a trend line in. And you can see the trend line is just around the 123 level, okay? So basically took out these three tails on the left. Now, in terms of taking it out, took it out there, came back, bashed into the level there, went through there, new daily high, back, came up. This high can't reach that high. So we're looking for a break lower. Like I said, I'll cover a break higher if we do in the week with another video. Where would you sell if you were bearish? You've got two options. Okay, first option would be there. Okay, so that would be just basically aggressively coming through the 122 level, and your stop would need to be behind this red tail here. That would be a very aggressive entry. A more conservative entry, you could try it with a small trade then add, or just wait for this level here. I'm going to draw a trend line there. Okay, so basically you got two bodies at the tail. We smash through, we come back, find support above the level, find support just into the level there, and then back up. Okay, this level here is 121.30, so that is the conservative entry, that's the aggressive one. You go for the conservative one, where could we go to? Well, I think here, this is really where the broad-based dollar selling came in. It's the 116 level. Okay, so if I line my line up straight, so you can see here that's Rishi getting to be PM. We then come down, dollar selling kicks in above the level, up we go. So 116 the first level, then I think you could go to 114. Okay, so basically before the mini budget sell-off rally, a broad-based dollar selling. So yeah, the rally in sterling, it's a big rally, but it's not to do with bullish UK fundamentals. Okay, so I personally think this trade looks attractive. In terms of GBP shorts, I did a video earlier on which covered GBP CHF. I was looking at CHF pairs. I think the GBP looks a good sell on the CHF Swiss franc as well. So yeah, that's the video. It's a very simple trade. Let's see if it works on a downside break. Obviously, if we go higher, we will look to reset entry and use the monthly levels of resistance. But try and think if there's anything else I can add. Nope, that is the video for now. I hope you found it useful. Take care. Have a good day.